Friday in the markets, and this is what happened. Big job numbers came out about an hour before the market opened, and it massively beat expectations. It printed about 250,000 jobs in January, as well as massive revisions for the entire previous year. So everybody's jumping on that as great news that the economy is running around and doing great. It opened above the resistance channel, or the resistance line that we'd seen for the entire year, right here at this 206.5 level that had stopped right there and right there. And even then, for me, it was hard to determine whether or not this thing was going to go up or go down, even though it opened right at the resistance at around 206.5. But it overall went up throughout the earlier part of the day, right here, down and up, and then crossed above, stayed sideways, and then right here we had S&P downgrade Greek bonds, so that introduced a lot of turmoil, and market dropped at 20 points in the S&P, 2 points in this SPY ETF before closing a little bit higher right there. Yeah, this is another reason why it's a little difficult to trade in the middle of the day in this particular market, because at any time you get a good jobs number like we got on Friday, and it's hard for you to determine whether or not the market's going to see that as bullish because they think the economy is going good, or bearish because they believe that the Fed is actually going to raise rates. That's the dilemma you're in addition to the fact that at any point in time some bad news could come out of Europe, and that's always bearish on the markets. Friday's trade was on Apple, and what we looked at on Friday was a peak, or something that looked like a peak at this 120 level that really hasn't decided to cross over yet, in addition to a couple of support channels that I have been looking at right here as well as right here somewhat, but that particular one was a little more conservative. And we took a look at the day right there. That line was 120.35. We said the stop was going to be at 120.75 right there. So that's what we looked at prior to the day, and this is what happened. The opened a little bit higher than it closed the previous day. There was our hardline stop that we drew prior to the day, and even at this point I'm still not sure whether I'm going to go up or down, simply because of the good jobs report that came out that morning and whether or not it was going to be bullish or bearish on the news. So what I was looking at is I was also looking at the S&P at that same time. If we go back here, it opens right at our resistance of 206.5 on the S&P, and then immediately after that, the minute later, it drops below. So once that happens, I'm looking back here at our chart the next minute, and it decides that it wants to go up a little bit. Now what's interesting at the very beginning is that I'm looking at the 120 calls and the 120 puts, and right at the open they're both trading for 50 cents. So equal way to go up or down, but I decided to go down right there I got in for 45 cents. Right there, I got the 120 puts. Alright, and I bought 6 of them. What I see next is move down, move back up. At this point, I'm kind of seeing a consolidation trying to develop, particularly right there. If we look right here, we see a bit of a consolidation right there, and drops below it a little bit, and then the confirmation of the direction after it drops to an intraday low right here at 944. So what I'm looking at now is I'm looking at the width of this triangle is going to be our target. right there, 100% extension. All right, that happens. The time rule that I see on the triangles is that 100% of the time this thing's going to break out in one of these directions and go 80%. So let me redraw this retracement here to illustrate a little better. So 100% of the time this thing's going to extend to the 80%, one of the two directions. But 80% of the time it'll extend to the 100%. So it's always going to reach the 80, and then 4 times out of 5 it'll reach the 100. After that happens, you cross below. I'm drawing this line right here, right there, and 1 minute later we're at our 100% extension. So at this point what I do is I sell 4 of the 6 for 75 cents right there. 75. At this point, no matter what happens with those remaining 2 puts that I bought, I'm still leaving with a profit of something. And the reason I do that is just in case it does something like this. So let me go ahead and draw that out for you. And we have our upward triangle, triangle, and then let's draw some lines around it. Right there. Right there. And after that happens, this thing decides to break down. Let's just say right there is 100%. Extension. So at this point, what's going to happen? First thing that can happen is the thing, get the triangle, and then just extension, and then just keeps going. So there's 100. Maybe it goes down to 200, something like that. Extension down here. That, in my opinion, rarely happens. So that's one scenario, not likely. Here's another one that's a little more likely. You get the triangle, move down, and then what happens is that this is part of an A wave of some sort. So that goes back up to, say, 50% extension, 50% retracement, or 61.8% retracement, then goes back down. So it does something like this. Then it goes up, B, and then back down for a C. Or it's going to do something like this. Triangle, move down, and that's just the whole move. And then it does something like this and goes back up. So one of these 3 is going to happen. At this point, I've already locked in a profit for the day. And so I'm out with 4 of them. The remaining 2, it continues, it goes up a little bit. See what happens a little bit here. It goes up, no panic, no panic. As you can see right here, this retracement is exactly at 61.8. Right here, this little stop. Right there. On this pullback up after the extension of the triangle, it stops exactly 61.8. This is why I keep 2 in my pocket, because if this thing goes back down here, and stops around here, I'm selling those for $1.50, $2, and that's 300 to 400% on a day, and that's pretty good. So we're looking back here. What I see now is this right here, another triangle. So now I'm thinking, if this thing decides to break upwards up to that direction, then I'm gonna get out. So this is now my stop, right there. Continues, and now it breaks above. Right there, I'm out. I sell the remaining 2 for 55 cents. Go back to original, and the rest of the time, good thing I got out, because now all of a sudden we're just hanging around, and then the Greek downgrade happens, and we start to tank. If this was a Monday, probably staying in a little longer because theta's not going to work against me. But it is a Friday. I'm looking to get out as soon as possible, and that's how it ends up. So I buy 6 for 45 cents, sell 4 for 75 cents down here, sell the remaining 2 up here for 55 cents. So overall, the net profit is 52% profit. Right there. So that's the Apple trade that we had, and even in a bullish trade on a bullish day, you still made money going down. Not bad. Now let's look at the other 2 that I was taking a peek at because they had a similar pattern as Apple did. It's Apple again. Another reason why we looked at Apple is because we had the very small trading day the previous day, so the day after we were looking for a big day. Here's what it looked like on the daily chart. Didn't quite get the big moves that we saw right there, or right there, but still happened somewhat. Then it certainly didn't have another day like this where the trading range was barely a point. But here's what happened on Google and Facebook. Google, we were looking to go down. In fact, all 3 of them were going down. But this is what we were looking at right there. We're looking at right there. We're looking right there. 532.5 was our stop. And the minute chart, here's what happened for me. I'm in here a little under 531. I get stopped out right here, 532.5. But I see the big move up, the cross above here, which usually indicates that it's going to break above after it goes above the resistance channel. So I get in right here to go up just to make some profit back, and I end up getting out up here, 536. In at 532.5, roughly, or like 532. See here, got in at 532.32 right there. Got out at 536 right up here. So I ended up not only making what I lost back, but made a little bit more. When you throw in the stop and when you throw in the loss and the win, 63%. And then the last one was on Facebook. Facebook looked like this, and we said whichever way it goes, whichever way it crosses above the, if it goes below the low, we're going to get in to go bearish. If it crosses above the high, we're going to get in to go bullish. That's what we said. Here's what happened. It crossed below the low of 75.21. I'm in for here. I sell it down here, and I get 100% return on the 75 puts. The reason I get 100% return is because the strike price is right here, and I'm crossing above. I'm getting it below the strike. I'm buying, and I'm selling it above the strike. Per se, I'm buying it out of the money and selling it in the money on a Friday. That's why I'm able to generate the big returns that I would. In the sense that if I was gonna buy something at say 74.75 and then sell it for 74.25 on a 74 strike, that difference is not going to be as high as it was from 75.25 to 74.75. Even though it's still a half a point move, you're still making more just based on the delta of the option. Stock trader doesn't really matter because half a point is half a point. The reasons I love trading technology stocks, you'll see most of the ones on the videos I make are technologies because number one, they move a lot. Number two, they're traded a lot, which means bid-ask spreads are tight, open interest is high, and it's easy to get filled. But also because these usually don't tend to move with the market per se, except when you have a big news event like we had at the end of the day. Therefore, it's certainly possible for you to go bullish on Apple and bearish on Google. They both move in the exact opposite directions throughout the day. It's certainly possible for you to make a lot of money on both of them. In my opinion, the way I've viewed it is that about 75% of the stocks, all stocks, follow the market. more or less. And the way I view it from a micro view is that I look at it like this. I look at the stocks, at all the stocks in the market, kind of like a river. So if here's our river, right there, you've got thousands of stocks in the middle of the river, some going this way a little bit. Let's draw like this. Some going this way a little bit, some really going that way, some going this, some down here going this way a little bit, some going this way, some going this way, but most of them are following one direction. Now, if the market decides to move this way quite a bit, like it did the last half of the day on Friday, then all of these other ones that are in these little movements to the right and to the left, right here, are going to follow that direction, and just all of them are going to go this way, regardless of what direction that people think that they're going in. And to illustrate that point, I look back at Facebook and Google from Friday. Here's Facebook. You can see it's in a downward pattern after the breakout from yesterday. So this one's, the sellers are more in control than the buyers. Price goes down. If we look back at Google, on the other sense, here's the day. This one's in an uptrend. And before the bad news of the market hit on Friday, it was in quite the up pattern, going all the way up here. Up there. But once this hits, even though this stock is in an up pattern, the entire market decides to shift, then it decides to go down. Likewise with Facebook. This one's been in a downtrend for the most part of the day. Here's when the Greek bond downgrade happens, and then all of a sudden this thing decides to go down as well. Even though it's already in a downtrend, it goes even further down. This one's in an uptrend, but then decides to go further down because the entire stream is pushing all the stocks down. That's the way I view it. And the technology stocks are usually the ones that don't follow the market most of the time. That's why I'm in there. Trade, we're going to be looking at Tesla and Alibaba, but before we get there, I want to look at Amazon real quick. We've had the breakout since earnings, and what I've been staring at is this line. Nope, not that line. This line right here. And we've been looking at that ever since the breakout, and whenever that gets crossed, we know the pattern is ended, and it looks like tomorrow might be that day. So I'm looking at right there. If it opens below that to go down, that's one I'll be watching, depending on what happens between now and when the market opens, and depending where Amazon opens itself. May go down, may not, but that's one I'll be watching. But the two I'll be most likely trading are going to be Tesla and Alibaba. Tesla going down. What I'm looking at is right here. Big move. We've had this move up, per se, this little up, down, up, down, this little cycle we've had an up, and now we've had a down. What I'm looking at right here is the support channel right there, which has 3-point contact with right there on January 29th, February 2nd, and now February 6th. Spread this guy out, and what I'm looking for is if it's a cross below here, we're looking to go down. If it's a cross below there, which most likely it seems like it's going to be, because in order for this trend to continue, it'd have to open above 220, which I don't particularly see, but you never know. There's not a lot of macro data coming out tomorrow, so more than likely it's going to move on its own, unless more bad news comes out of Europe. But what I'm looking at would be a stop above this line right here, where if you connect the tops of the past 2 days, where that crosses, going to be 221.25. Call it 221.5 for computers. So what I'm looking at, I will say if it's a cross above 219 will be our entry point. We're gonna go bearish with a stop at 221.5. So that's my setup on Tesla. Alibaba, we're gonna look to go up based on a certain entry criteria. And what I'm looking at, if you go back here, Alibaba is almost looking like a Twitter of sorts, where you've had this massive move up, and then based on the IPO valuation, everybody's getting excited, and then everybody comes back crashing down to reality. And I think that's what we're going in, but we're gonna look like we're trying to catch the bouncing grenade tomorrow. And what I'm looking at right here is this line right there, and if it crosses right here, we're gonna go up. It looks like it will, because Friday's close was 85.68. This cross is 85.22 right there. Well, a little higher, 85.25 we'll call it. So what I'm gonna do is if it crosses below, we'll say 85.5 will be our entry point, with a stop below 85 at 84.7. So an entry, if it crosses 85.5 to go bullish, and a stop at 84.7. So those are my two lookouts for tomorrow. Baba going bullish with a touch on 85.5, or a trade below 89.5, and Tesla at an entry at 219, a trade above 219 with a stop at 221.5. That'll give us two good ones to look at. In addition, I'll be watching Amazon, but not necessarily trading it. So those are my lookouts tomorrow. Good luck.